Joining us now, Wells Fargo senior energy analyst Roger Reed. And Roger, give me your read on the quarters for both these companies.
Nice play on words there, David. Yeah, good morning. Yeah, we actually like both of these companies and have for a while. Exxon really as we came out of all the challenges in 2020, and then Chevron a little after that. But what I think you have to like about both is, and you can say this about the industry, the capital discipline. I mean, it's been pretty rare, maybe not ever happened where you've had commodity prices this strong and you've had the companies really pull back on CapEx. And as a result, we've seen really strong returns and tremendous performance in terms of dividends and share repurchases.
Yeah, not as though they haven't been playing, at least to some extent, in terms of the acquisition game. Now, obviously, the Denbury deal was not about production. It was about carbon capture. Chevron's done some deals. I mean, is your expectation they will start to do more when it comes to buying more properties, perhaps in the Permian and other places?
Well, I mean, I think if you look at these companies, they're really kind of portfolio businesses, right? So they're buying and selling all the time. You had Exxon selling a small, this quarter selling a small refinery in Montana, right? So you're always looking for them to trade up. In terms of, as you mentioned, the Denbury acquisition, that's much more about moving into the carbon capture side of things. Chevron doing the PDC is about consolidating an area that they were operating in up in the DJ Basin in Colorado. So I look at both of those transactions as kind of the bolt-on, type, not necessarily a company transformation type. But overall in the industry, there's been more or less a move of publics buying privates and a little bit of publics on publics competition.
Roger, both companies have talked about lithium mining as potential businesses. Both have said that, lithium mining is within their core competencies. And I'm wondering how you view that as an area that would that increase their valuation in your view? Is that a great business for them?
Probably a little too early to say whether it's a great business, but if you look at how they're both trying to approach it as opposed to a true mining company, right, which we probably wouldn't be terribly thrilled with, you're looking at it as more of a processing, right? They have drilled wells all over the world. They have a very good idea of what kind of brine aquifers are out there and which ones have more or less, lithium in them. And so if you think about it as, a refining business, which both companies already do, bringing water up, separating the lithium and whatever other attractive metals may be in it, re-injecting the water, I mean, that's bread and butter for both companies. So I think if you had another commodity that, in a sense, was at a growth market, but also, as an offset to oil and gas, I think we would consider that a positive in the big picture.
So what's going to be the impetus to a higher stock price here? Other than obviously a move up in the underlying commodity.
Yeah. Give me you take the easy one. I'll take the hard one.
Yeah. Okay.
Yeah.
Exactly.
Obviously, commodity prices help. One of the things we've kind of been dealing with the broader market and in energy this year is the fear of a recession, the concern of a recession. So I think to the extent that we see the market get back we're in a growth mode, right? We're not worried about employment. We're not worried about an expansion. Then I think the question turns back to, are we investing enough globally in the oil business to keep, supply where it needs to be, not just in 23, but, 24, 25 and beyond. And I think if that mindset takes hold, then we'll see even at this oil price, we would see the multiples expand and we would see, a much more reasonable valuation on these companies relative to their historical levels.